This Cardano video is years in the making. In this video, I'll be going over my specific Cardano ADA targets for this bull cycle with you. I want to show you not only the targets, there are multiple, but my approach along the way in terms of taking profits. I have zero interest in round tripping this bull market. And so I want to just lay out for you not only the targets, but what I will be doing so that that does not happen this cycle. So please hit the subscribe and like on the way in if you're not in our intelligence system with our Cardano risk model and our exit planners and all of our other risk models. Get back there right now. We have a free trial. Click the link below, get set up, start strategizing and planning. I want to mention to you, yes, I'm building this system. I'm building a business here, but these risk models and what you see here, this is built for me so that I don't round trip a bull cycle and so that I have good guidance like never before in terms of when to take profits. So I will very much be using this kind of throughout this video and our exit planner throughout this video to discuss my exact approach to the cycle. I'm putting it all out there, everybody. And I'm telling you, I'm so incredibly grateful to have this tool available this cycle. Let's start zoomed out on the weekly. Before we get into like the specific targets, there are multiple. I want to just show you a couple of things. Number one, if we go on the daily chart and we kind of go back, and what I'm going to be doing is, just so you have perspective, we've been discussing the similar structure that we have back here last cycle to what's been happening right now. A lot of people have, but I want to specifically look kind of in this area. I don't know if you were around back then, but back all the way in June of 2020, I did this video like 8 to 9 cents. And here's the video. I was talking about a potential $3.33 ADA for the all-time high. That might have sounded crazy at the time of doing that video, but look what ADA went on to do. We broke $3. And the reason I'm bringing that up is because as I sit here and do this video, we're at 94 cents, and wait until you see how meaningful that is, 94 cents compared to last cycle at this moment. We're at 94 cents. Some of these targets might sound crazy in a similar fashion, but I would just want to say, that's why I'm sticking to the data, and that's why I'm preparing very realistically, unemotionally for these scenarios. I'm an ADA bull, obviously, but it's data that is playing into what we're talking about here. So if we go over and we look at the daily chart back then, there's that moment. But what I really want to specifically draw to your attention, and then we're really going to start talking about the reasoning behind my targets and what the targets are. I have here November 10th to January 7th. This is meaningful. Right now, Cardano risk score is a 41. If we zoom in and we go to, if I can find November 7th, right, 2020, it was sitting at a 41. Our risk score sitting at a 41 at that moment, and you can see ADA price was 10 cents. That alone is insane to me. So right now, we're sitting at, I think at the precipice of an altcoin bull market, a similar risk score, when we were at the precipice of a bull market last cycle, similar risk score, but we're not at 10 cents, everybody. We are at 94 cents. So the starting point back then was 10 cents. In my view, the starting point right now is 94 cents. So keep that in mind as we start breaking down these targets. But the other thing is this that plays into this daily chart move, because I have November 10th to January 7th. Well, what's January 7th? January 7th is meaningful because it went from 10 cents to around 30 cents, right, to January 7th. And the 30 cents January 7th is important. If I go back here and we look at this, and this will play directly into my analysis and approach for the cycle. I have January 7th, you can see 30 cents, risk score 62. That move there from risk score of like 41 through the 50s into the 60s, that move there is something that I am anticipating, and I'm so curious to see the price action of ADA in a move like that this cycle. That is so meaningful for me, and you can use these risk models in all different ways. This is something for whatever reason, as I study these things, that is meaningful to me, and I want to lay that out for you. Going from the 40s into the 50s into the 60s, that move, I think, will be an indicator that we must pay attention to. So now that I've laid that out, this will help us kind of dissect the plan. So here is our price mode. Here is our exit mode, or our risk mode in the exit planner. and we can start here and start discussing our speculative price targets, and we can work it all together. Here we go. Price target time. I'm going to start with our kind of pattern, our structural pattern target. And it's this structure that's been setting up for, basically years, right? From bear market lows. It is very similar to last cycle, this rising, broadening wedge that we've been tracking. And it's so interesting to me if we look at this, not only the structure move, but I know timeline has been extended, but it's not even been that crazy, right? If we look at the bear market low from last cycle to when the real breakout started for ADA, it was like 763 days. Right now from bear market lows, we're like 820 some days. That's not even like that crazy. We can't be so spoiled to think that, man, it would happen exactly like last cycle. We can't be that spoiled. But with that being said, I do find it interesting that the timeline isn't even that off. But let's talk about this. The wedge target is very simple. The wedge target is around $12. Now, I want to say that's kind of in this environment where I think crypto has this extended super cycle. It just surprises everybody. It goes kind of into 2026 in a way that most were not anticipating. I think that is what is in play. A parabolic move for Cardano is in play. It's a structural, targeted move. It's not just a number out of nowhere. And one thing I want to mention to you is like a rising, broadening wedge like this can often be connected to, or many people think it's a bearish pattern, meaning we need to break down. Well, number one, however you look at this, I think if this COVID dip was not in play, this was almost exactly the same pattern, and we didn't break down, number one. But number two is I was looking at Bolkowski in what he and how he monitors these wedges, and he actually has, through all of his trades, downward 52% of the time. And so I want to mention, I'm not bringing it up because that's helpful in saying, hey, we're going to get a breakout to the upside. I want to bring that up because at the end of the day, what he's saying is it's like 50-50. It's like a 50-50 thing, one way or the other. So we can't sit here and say, hey, this pattern is bearish, because obviously it's not. 52% of the time downward, I think, does not mean it's bearish. This statistic of 50, 52, right, and 48 is 50-50. That's number one. So, but that wedge target of above $12 is, I think, very much in play in this very bullish environment where we will see other altcoins surpassing their more conservative targets. So that's number one, $12. We can mark it. We can remember it. It's, that is what it is. But I think it becomes more useful even as the targets get lower, because then we become in this more conservative, and this is me. I like not hyping up price targets, and I like being more conservative, more realistic, and maybe even just extremely conservative in terms of taking profits. Because the mistake that most people make, I think, is the exact opposite. They're just extremely too bullish, and they get so wrapped up into the price action when it finally starts breaking out, they just think it's going to keep going. We can't do that. We have to focus on the data. So I want to go over the next two data points for price targets, and then I'm going to show you my kind of strategy in our exit planner in terms of ADA. So going back to the weekly, what I have next is a cycle 1618. And when I was doing my analysis, I realized how useful I think this is. I really like the 1618 targets in general. But the 1618 target, if we look at last cycle, right? Well, we go back 2 cycles ago on this chart to January 2018, all-time high area. We take our Fibonacci from the swing high to the bear market low, or even the capitulation, and we're right in this area of 1618 around $2.24. If you would have done this analysis last cycle, right, and said, hey, and we could have been like right here, and you're like, I'm taking a Fibonacci swing high to swing low. I want to see the 1618. There's our target. What a great target. We surpassed it. We broke $3. But what a great area to start taking profits, right? And notice this. There was even a slight resistance, and almost it's kind of looked like, man, that was the top of the bull market. We consolidated, but we did go higher one more time. But think about that. $2.20, $2.30, 1618, such a useful target last cycle. And if you look at that moment, May 2021, we can go to something like our risk planner, right? Or our risk model for ADA. We can go to May and that swing high 87, approaching the 90s. So when you start thinking about if Cardano starts making similar moves, not only to the 50s, the 60s, the 70s, but then into the 80s and 90s, you get a sense here on this chart, on this risk model, how crucial it becomes to start taking profits. There's no sense, in my opinion, if the risk models start getting up, even especially into the upper 80s or even the 80s, there's no sense to sit around twiddling our thumbs, not taking some profits. And so we are nowhere near that right now. We're at a 41. We're still in like pre-bull market territory. But this is one way in which I'll be using the risk models, and our members will be as well, to say, hey, when we start getting into these areas, time to take profit. So now we have the confluence of a very nice risk score to take profits, a signal to take profits. But not only that, we have a very nice indicator, 1618 higher high indicator for Cardano. And the reason I'm using last cycle is because now, guess what? We have a new 1618. So we're at a 41 risk score, and our 1618 is around, what is that? 493. Let's just call it $5, $4.90 to $5. So last cycle, the 1618 was sitting at around 226, 220, whatever. Now we're sitting at around 490. So you can see the upside potential from where we are right now, just to hit the 1618. And remember, last cycle, we surpassed the 1618. And we surpassed it, I think I was doing analysis by like 30%. Let me just see. So yeah, like 37%. So to give you an idea of what that is, if we go to the 1618 this cycle, if we were to surpass it again by around 30%, it's in the $6.40 area, right? That's what that is. But a very realistic target, in my opinion, for Cardano, if not surpassing it, and we're going to talk about what that could look like. We already did. The wedge target's at $12, but very realistic target of around $4.90 for Cardano to put in for this bull cycle. And that is why. There's strong reasoning for that. And our risk model alone says that upside is very much in play. What will be interesting is, number one, if it gets there. And number two, if it does get there, the manner in which the price action got there. Meaning you can see last cycle, it was just like parabolic to the area. And the risk model never cooled down. It was just a quicker move. We've had these overextended consolidations this cycle, and this is partly what's been frustrating people. Will that continue as we just keep going higher, right? Like we started a huge consolidation to like 24 cents, pump, huge consolidation to 34 cents, pump, huge consolidation to like 55 cents, and we're maybe seeing a pump again. But you see this extended cycle, how it's working out. So we have the wedge target around 12, the 1618 target around 490, and then we have market cap targets. I want to discuss this with you. If you look at this first cycle, swing high 2018, to the next cycle, bull market high, you see around like 100, it says 119, 120%, higher than the previous cycle. Boom. Well, I did two things here. I said, okay, if we get a similar thing play out, we go 119% or so higher than last cycle. Well, that will bring us to a $7.25 Cardano, a $291 billion market cap, everybody. If you go look at market cap right now, just to give you some perspective, Ethereum is at a 567 billion. So this is like Cardano's all-time high of $7.25, if that played out, is still like half of what Ethereum is now. And by that time, Ethereum could be a $1 trillion market cap, because remember, altcoins might be just making massive moves. So that just gives you a sense of the reality and how realistic this target for this most secure decentralized chain is, as Bitcoin DeFi and all these other narratives are coming online for Cardano. The other thing is XRP is at 188 billion, right? So going back to the Cardano chart, 291 billion is not that unrealistic. But I want to get even more conservative. What if Cardano does like half of that, right? What if it doesn't, and because of diminishing returns and things we see in crypto, what if it does 60%, right? So here we have like 60, and I guess I charted around 52%. No, here we go. Right around 57%, we can call it, but it's around half. Instead of 119, we're at 57. Well, here we have a $5.08 Cardano, and that's a $197 billion market cap. So a $5 Cardano, as you see, very similar to the 1618 higher high. A $5 Cardano is a very realistic target for Cardano. So here we have a bunch of targets. We have a $12 kind of parabolic move target, I would call it. It is in play. It is realistic. But then we have a 1618 target around 5. We have a market cap target around 725 and 508. So you see this like I've been saying $5 to $10 seems just realistic, and nobody knows. But you can see kind of the average of all these areas, $5 to $10 seems very much in play, and we should prepare for that range. But here's where things become even more, I would say, even more conservative for me. Those are very realistic targets, but I won't be sitting around just waiting for, $5. There are targets along the way that are an area of interest for me. Realistically so. We have gone through a multi-year bear market. There has been accumulation that has been happening. Many of you might have been accumulating, right? We hit like 22 cents. We're at 94 cents, right? I know it's been volatile, but anybody that wants to take profit now or at $1.25 when we're testing the bull market doors again, if it happens soon, take profits, everybody, if you want to, if it makes sense for you, right? And then we have this structured move target close to $2. Maybe you want to take profit there. What I'm saying is evaluate your plan. It's okay to take profits on the way to our targets for the bull market, on the way to the range. There's a lot of risk in terms of just holding Cardano until maybe it gets to that area. Okay, so this depends on how you've been accumulating. But if we go to our risk model, we start saying, okay, let's look at our risk model and take it into account as we start planning our exits. And what I did here is I put $100,000 into this kind of demo scenario, 25-cent average accumulation. And I just came up with these areas that could be interesting, maybe to some of you, maybe not. Maybe you want to tweak them and play with them. But somebody might be like $1.25. From the analysis perspective, it's the top of the bull market doors. I'm tired and exhausted of these swing high fake outs and then like months and months and months of consolidation. Swing high, fake out, months and consolidation. I'm not doing it again. If we get a test even to the bull market doors at $1.25, and I still think that could be the beginning indicator of the bull move, there are people that might want to take profits, right? And that is completely okay. So $1.25, you can put on your exit planner. Boom, $1.25, selling some ADA, $25,000 gains, and then it tells you remaining holdings of 75%. Now, everything I'm going over in the price mode will become incredibly more useful when we look at risk mode. But $2, somebody might be like, all right, we broke $1.25. I took some profit. I'm going to take more profit at $2. That becomes meaningful from an analysis perspective because then we're at the upper end of this structured move. So especially if people are like, you know what, we had this move, consolidation, this move, consolidation. If we get this move, I'm just going to be like taking some profits because we might go into more crazy fake out consolidation. Somebody might want to do that, right? $3, kind of the all-time high area scenario from last cycle. $4 on the way up to our $5 range, $6. And then I might want to add a $7 because we just did analysis and we saw a $7 ADA. I might want to add a little bit of an exit on the $7 ADA. And we have kind of a nice scaling out kind of price speculation move, right? $317,000 in gains, 1,200% return on investment. And it's pretty decent. But that's completely speculative. So if we go to the exit planner risk mode, look at this. We can set alerts, first off, for when risk levels hit a certain point, you'll get an email notification, hey, we hit 60. 60 is a meaningful area for me. Not saying I'm like selling all of my ADA, but it's just a meaningful area for me because 60, if we look at, and it shows you the line, here's 60, that first line here, it shows you that ADA last cycle was kind of breaking 60. It's like 42 cents on its way to the upside. That was potentially a nice area to start just getting the selling fingers warmed up, take a little profit. That's fine. It went a lot higher, but it's fine. And then it's the 70s, because look how quick, if you look back last cycle, it went from 60 to 70 into the 80s. This is where things become important to me, because when you look at this chart, and we can only speculate, we just don't know. If I zoom in on the chart, look at where risk is. It's all the way down here. What will it be when it gets this first line of 60, right? And then 70 and then 80. What will it be? Because right now we have no idea. But when we start thinking about these price targets that we have back here, what will risk be when it's $1.25? Will it be 60? Will it be 50? Will it be 70? I don't know. But like, that's when I'm looking at these price targets, this will be what dictates probably the amount of ADA that I might sell to take some profits in the bull move. And this is exactly how the risk model will work for other assets. It's kind of like, fine, speculate on price and do it within this mindset of analysis. This is basically what I did last cycle, right? When we were kind of doing our targets and I was trying to plan my sells on a spreadsheet. It's all like speculation. But if we had guidance on what risk was doing all through this move, I think I would have made better decisions. I did pretty decent last cycle in terms of taking profits. I just know I could have done better. I really could have. And I want to do better this cycle. So these risk models in our exit planner will help me in guiding my price speculation targets as well. So, and this will all have to do with what's your starting point ADA, right? What's your average accumulation area? And then the other thing is, how do you want to allocate your exits? Maybe you want to go very small, like because you think $1.25 is nothing. Maybe you don't even want to take a profit there, but like I have 10%, or I have 25% here. Maybe you want to do 10%. That's what 10% looks like, right? And you still have, by the way, final portfolio after $302,000 gains, 20,000 ADA left over, right? So you might be like, hey, I've got 20,000 ADA left over. Here's my exit strategy. Let's sit back and monitor what risk scores are doing along the way. And that's essentially the basis of my plan for this cycle. But now I think it is useful that we have these targets to the upside. They are just 100% there. And along the way to the targets, we can monitor just the shorter term price action. That is, even on the very short term, we have this resistance area like $1.04, right? And then we have our bull market door resistance area is $1.25. And then we have around $1.80 to $2 resistance area here. What does Cardano price action do all through this moment is something we have to just be aware of and patient with. If you even look at last cycle at the bull market door, the upper end, there was resistance for weeks and a little bit of volatility, kind of maybe concerning volatility, and then ADA exploded, right? So this could be what happens now. Maybe we make our way to $1.25 and boom, we're back at 92 cents in a week, but that could be still the setup for the next move. So this is all speculative, but I just want to give you a sense of where my head's at with realistic targets. When you take market cap in mind as we do this, I think it's very realistic for this top 10 crypto, that is Cardano, and even a $291 billion target, 725. It's, to me, just seems incredibly realistic. And I'm trying to not be hype about these targets. I'm trying to be realistic. If cryptos and altcoins get their bull move, a very nice bull move, even in an extended super cycle move, middle of 2026 type of deal, all of these areas are in play for Cardano. This is about planning, strategizing, not expecting anything, anticipating everything, and balancing your risk along the way. So hopefully this video was valuable to you. And again, if you're not in our intelligence system, I invite you to join our members and just start planning, start strategizing your exits. Even if it's not Cardano, you can go to our website. You can get a sense of the assets that we do have available. We have some of them. We have, like, I think out of all of crypto, our platform has one of the most amount of assets in our risk models. This is a lot. I know it doesn't seem like a lot. You might think there should be hundreds and hundreds. This isn't like coin market cap price data. These are risk models. These are institutional grade risk models. So this is a lot. But if your crypto is back here and you want to start planning your exits and start strategizing, we will eventually be building a very similar accumulation tool. So not just an exit planner, but an accumulation planner, because if you're a macro investor in these cycles, that will be important. Because again, I think crypto is just getting started. So when we enter a bear market, I don't know when it will be, we'll track it. Accumulation will be necessary as well. So I appreciate you watching. If you're not a subscriber, please subscribe. If you enjoyed this video or got any value from it, please consider giving it a like. I'll see you in the next video. God bless.